Guess where my money was last week? At the Silicon Valley Bank. When it went bankrupt, when there was a run on the bank. And we had more money in there than the FDIC insured $250,000. And for about 48 hours, I'm like, I guess all I got left is in my piggy bank. So I'm gonna go ahead and have to bust that to grab some cash to float this thing. So the banking system is clearly broken. There's a huge mess to clean up. And right now you gotta be asking, is my money safe? Sitting in the bank, is it safe in a 401k and an IRA when it's lost all this value? Is it safe in the equity in my home? Because I don't know if we're in a crash, are we in a free fall, are we in a correction? Am I gonna lose all of my hard-earned work? And the safest place I was told where I couldn't risk my money, the bank? Is that a safe place to keep my money? What am I supposed to do? Have you ever heard that phrase, FDIC insured? Well, if you didn't know what it meant before, it definitely has meaning in your life today. The banks fell. On Friday, March 10th, we experienced the largest bank failure since 2008. Silicon Valley Bank, worth about $209 billion, was assessed by examiners from the FDIC and found the company to be insolvent. 2 days later, on March 12th, Signature Bank, worth $110 billion in assets, suffered a similar fate. And you know what? We're seeing the share value of banks everywhere start to get rocked, start to get hit. Here in Utah, there's a very prominent bank, Zions Bank. Its share price has devalued dramatically. And right now, it's a measure of confidence. People are scared and they're worried. And you know what? I can't think of anything that smells worse in a recession that reminds us of a Great Depression than when you go to the safest place on the planet, where your money sleeps at night, a bank, and all of a sudden, it's not there. If we have bank failures left and right, it becomes the question, Kris, is there anywhere safe where I can keep my money? And I'm gonna tell you at the end of this video, I'm gonna show you where I keep my money. Is it in a bank? It's not. It's somewhere a lot smarter. Kris, why should I care about Silicon Valley Bank? Because it could have been where you banked at, and this could happen to where you bank next. Check it out. Silicon Valley Bank was America's 16th largest commercial bank and provided banking services to almost half of all U.S. venture-backed tech companies. Luckily, the government stepped in and is guaranteeing all deposits, even those above the $250,000 limit. Now, this came as a huge relief to me because one of my companies, it's tech-based, and right now it's growing a lot. It has money in the bank. It was sitting in this bank. And so I remember on Thursday when I got the news from the CEO of our company, he lives in Germany, he panicked and he's like, Kris, all of our money may have just evaporated, and what are we gonna do? Now, the government did step in and they said, we're gonna guarantee this, but it begs the question, if this happens to more banks, can the government do this for everyone? Is your money actually safe? And what will happen to the value of the dollar if we have to bail out all banks? So let's talk about the cause of this collapse, because it's different than the banking collapse of 2008. Do you remember in 2008 they had heartbeat loans? Like, oh, you have a heartbeat. You can say that you make any amount of money and we will give you a mortgage on a piece of property. And the properties were overvalued, and when they came down, all these banks were like, oh, we gave out all of these 100% loans as if the market was going to keep going up. And now all the real estate has come back to us and it's breaking our backs, and that's why the banks failed then. But with Silicon Valley Bank, it's a little bit different, and it ties back to the pandemic. Check it out. SVB bought billions of dollars in bonds during the pandemic when interest rates were super, super low. Now, bonds pay out a very basic dividend, and something happened that they didn't foresee. The feds hiked the interest rate so high because they were trying to tame inflation, and that did something to those bonds. The interest rates rose, and the SVB bonds lost their value. So all of a sudden, they were sitting on all these bonds that had become way less valuable. And then as borrowing costs increased, these tech startups that bank there, they had to pull cash out so they could repay their debts. But guess what? They basically went into the bank, they went online, they started withdrawing money, and all of a sudden, Silicon Valley started saying, we don't actually have real money because it's trapped in our bonds. And if we don't have the money to give our customers because it's trapped in bonds that we can't liquidate except for at a massive loss, we're insolvent. Finally, most companies were forced to draw on deposits that were held by SVB. They ran out of funds, and there you have it. That's how it happened to this bank, and I got news for you. It's not like they were the inventors of this idea of investing in bonds. Guess what? A lot of other banks have done it too, which is why we have a lot of banks right now in really steep doo-doo. So is this an American phenomenon? Or is this actually taking place in other parts of the world? Check out what happened in Switzerland. Credit Suisse, this is one of their main banks. Just days after SVB collapsed on March 14th, Credit Suisse published its annual report for 2022, saying that it had identified, quote, material weakness in controls and financial reporting. Share prices dropped by almost 25% after its largest investor said that it could not provide more financial assistance. In other words, someone came in and had to rescue this bank as well. So right now, fortunately, governments are saying, uh-oh, this is going to hurt our people. Let's come to the rescue. While banks are collapsing, the government has been stepping in to reduce panic in the marketplace. The clients who banked with SVB and Signature are being made whole, and Credit Suisse was offered a $50 billion bailout from the Swiss government and then was bought by UBS. But guess what? Has the debt been called due? Have we made too many financial mistakes? Is this the beginning of a collapse of a system? In other words, is this systemic, or was this just a handful of banks? While governments seem to be ready to step in to help failing institutions and prevent panic, devalued bonds are an issue for most banks. In December 2022, US banks had a total of $620 billion in unrealized losses. With the future crash on the horizon, people are looking for alternative options. They're asking, should my money be sitting in a bank? Literally, my mom texted me. She didn't got a ton of money. She's like, son, should I pull my money out of the bank? That was her worry. And you know what? She's like many people right now asking, is there an alternative? And I promised you at the start of this video, there was one. Let me share with you my favorite alternative. In economic downturn, lending becomes risky for banks because people are more likely to default on their loans and are less likely to have savings. In these situations, cash value life insurance can be a safer option as the payouts remain the same and the money is not leveraged to the same degree. Now you might be thinking, Kris, cash value life insurance, what do you mean? Are you talking about like term life, whole life? I'm talking about a very specific type of life insurance that you can put money in, treat it like a bank, and you can pull money out. And these institutions, they're playing a very different game, part of which is an insurance game on the fact that human beings are going to die. And in the meantime, they're getting paid a lot of money to manage all of these life insurance accounts. It's a different risk class and one that is likely a lot safer than what we're dealing with these kind of banks. And by the way, it's where I stash my money anyways. There's actually 7 core reasons why I put my money in life insurance like a bank account that I can access and do all of my banking with. Now I'm going to go over the 7 benefits of this type of life insurance, and then I'm going to show you in the link below where you can actually set these up all day long for free. The first benefit is that they guarantee a 4% ROI. Now I know what you're thinking, that's crazy. Like when I actually put my money in the bank, my savings account doesn't give me 4%, doesn't give me 1%, it gives me a lot less than that. Well, this hedges against inflation while you wait for your next investment. Because remember, I'm stashing my money here so that I can do other investments where I can actually get my money working for me and making me money. Number 2, it actually pays out dividends on top of that guaranteed ROI. Most insurance companies pay an additional 1, 2, or 3% annual dividend on those whole life policies. So I've got 4% guaranteed here. I have another 1, 2, or 3% here. Well, now I'm sitting at 4, 5, 6%. I'm starting to compete with inflation and feel a lot better about my money here being safe as opposed to sitting in a normal bank. Number 3, it allows you to borrow cash value to buy more assets. This is called borrowing against the cash value of your policy, very much like pulling money out of a bank account. I can pull it out here, and here's what's really cool about this. I can literally leave my money in my insurance policy earning something for me while pulling it out, having it sit in another opportunity, another investment in my own bank account, and I can have my money for me earning and doing good things for me in 2 places instead of 1. Benefit number 4, it enables tax-free growth, that guaranteed 4%, the dividends, all of that actually grows tax-free. Now this is starting to sound like not a little or a lot, but like mega better than a normal bank account. Benefit number 5, it offers guaranteed protection. The government views a person's life insurance as a type of protected asset class. That means that other people can't sue it. And so far to date, the government hasn't chosen not to litigate against these type of accounts because they're like, hey, regardless of what you do, this is money for your family and for their future should you die, etc. So this is one of the safest places on the planet that you can store cash. Number 6, it provides a death benefit. Just like any other life policy, it means that if you die, you can use that death benefit to give to your loved ones. You can pay a bunch of stuff off. It puts your loved ones in a safer position. And finally, number 7, it does deliver disability protection. So if you become disabled, the carrier will actually continue funding your quote-unquote life insurance policy, your bank account, so you don't have to keep putting money in. You'll basically be covered for life. Now, when I stack up all 7 of those benefits, you start to understand why I've been banking this way for the last 15 years. And if you want to start banking this way for free right now, there is a link below where you can learn how to do just that. Years ago, I remember what it felt like to have $100,000 sitting in the bank. It was the first time I had ever had that amount of money there, but I started getting worried because I knew that I was approaching that FDIC limit, and I started asking myself, what do wealthy people do when they accumulate cash? Do they just go to the bank and deposit it? And it turns out they don't. That's actually where I learned this strategy of what wealthy people do. And of course, they're leveraging a lot of other strategies. They put their money in businesses. They keep their money in real estate. They don't keep it all liquid, but when they do, life insurance is a really smart place to put it. Now, over the last decade, I've had a chance to vet dozens of companies to find one that I really like, a company that sets up these policies for maximum benefit for you and will actually set them up for free. And it's not normally very incentivizing to most life insurance companies because when you put all your money in with the ability to take it all out, it reduces their commissions and squishes them down to something so small. Most insurance people don't want to actually tell you about this. But if it's what's in your best interest, I'm going to tell you what it is. Click the link below, fill out the information, and talk to a member of that company. And what they're going to do is they're going to tell you about your life insurance bank account policy. They're going to talk about how you set it up, the benefits, what it all looks like, and then they're going to help you put it in place. That is one of the best things that you can do for yourself to create greater protection right now more than ever. If you've liked this video, you might like my next video talking about tax returns, how they actually work in 9 minutes or less so that you can rig the system to your benefit. Click the video right here. Let's get going. Come on. Mr. Knightley. Mr. Knightley, come.